properly posted?
Yes, the meeting was properly posted.
Turn on, everybody have their mics on? Okay, so opportunity for citizens to speak or correspond. I don't have any correspondence. Does anyone have any correspondence? I don't see any citizens here to speak, so we'll move right on to the committee issues, action items, and approval of monthly vouchers.
I have 3 questions regarding the vouchers this evening. The first one is regarding a check for $19,788 from Main Stage Theatrical Supply. And the question was what work was being done? And it is in regards to the South High School lighting and sound console. It was replaced because the system was old and in need of repair. The service building staff could no longer get parts due to the system being obsolete. And then the second question was in
Good to
regard.
see that. That's needed repair for quite some time,
Yes.
actually. So, I think it's probably needed repair for 5 or 6 years at least. So they've been kind of piecemealing it together and making it work. Maybe trying to do some things that might not need to be done or shouldn't be done from a safety perspective, but we got there, so that's good.
Okay. Then the second question was in regards to a check for $64,330 to the Richardson School. You know, what services does the Richardson School provide was the question, and how many students does it serve, and where is it located? The Richardson School is an elementary extension of the Economowalk Developmental Training Center. It's in a school-like setting. The school is located in West Allis, and there are currently 9 school district of Waukesha students served by the Richardson School. The services include daily tuition and in some cases one-to-one aid speech and language services. And the school serves children with autism, spectrum disorders, cognitive disabilities, orthopedic impairments, developmental delays, learning disabilities, and other health impairments. And that could be, those questions for the outside placement services, that could be a whole meeting in itself. And I was speaking with Joe Cook, the Assistant Superintendent for Student Services, and he said if there's any other additional information that you'd really like about those outside placement services, he'd be happy to talk with you about those.
Yeah, one of the things that I don't think we ever have had is kind of a summary of all those, or maybe we have in terms of
There is
a
one,
description?
I can dust it off.
yeah, but typically, are the payments annual? Are they quarterly?
monthly
Are they monthly?
payments.
Okay, so this is 64,000 for 9 students on a monthly basis.
That's correct.
Okay, and I know there are some, and students don't necessarily stay the whole time.
That's correct.
They kind of come in and out as services are needed, kind of thing. For
Yes.
at least for this particular school.
Yes.
So what could help, I think, to get the big picture is what are those services? Where are we going for those? If students are enrolled the whole time or not, they kind of come in or out, and then what are the costs, kind of thing.
Okay.
That could help if
Yeah,
Joe
I'll
could.
provide a confidential summary, because we did that 2 years ago with, when Jen provided that for all of those outside placement services, and we can update that.
Okay.
Send that to all of the committee members.
Yeah, no student names, obviously, just
Obviously, it's
these are
all-
counts, right?
Yes.
Yeah.
What it can do is include that in a Friday update of your board packet. That way everybody gets it.
Yeah, that would be good.
Just to, go ahead and finish up this, and then we'll.
Okay.
Yeah.
Then the final question was regarding, we have 15 different checks for our tax sheltered annuities. And so that was really the question was, how many are on the approved list? And there are 15, and that's been that same list for quite some time right now.
There was discussion at one point in time that we might simplify that number. Has that ever taken place, and we decided just to keep it at 15, or?
We currently are doing some analysis of the various TSAs and are looking at another contractor possibly giving us a proposal on how we might simplify that.
Okay.
Okay, the only question I have on this vouchers, is there a reason why we wouldn't just publicly post these instead of having them distributed the way we do? Why can't we just publicly post expenditures? Is there a
You mean
reason?
rather than give hard copies, or?
Well, if we had it on the FNF, on the website on our FNF, and we published, and we publicly posted the vouchers and our budget update, so that anyone could see it, is there a reason why we couldn't let everybody see these numbers?
No, they're public record.
Yeah, I mean, I would say, and then we'd take it down at, you know, we wouldn't keep adding to it, we'd just rotate in.
Put the new one up.
If there's no reason not to do that, why wouldn't we do it? Because then anybody in the public could simply see every expenditure we have, and I don't think we have a reason not to let them see it. Would that cause a problem in any way that you can think of, Mr. Gray?
Some districts do a modified version of that. I've never looked at one where everything, but I mean, I know some will put out, you know, like a summary of a check if it's for a certain vendor or something. It might, you know, there might be a summary of it. But I've never really explored doing it, but I mean, it's not, some municipalities and districts do have some form of that, so.
It'd be like
It would not be unusual.
It'd be maximum transparency, I guess,
Yeah,
right?
it's just a matter of how easy we can do it. If we can do it, it shouldn't matter.
Okay, now we can talk about it later. Any other questions on the vouchers? Well, I need a motion, action, Mr. Como.
I move approval of vouchers as presented.
Second.
Motion by Mr. Como, second by Mr. McCaffrey. Is this the voice or, okay. This is a roll call? Voice, okay. All in favor, say aye.
Aye.
Aye. Opposed? None opposed? Guess I'm gonna have to have a cheat chart when I have to say aye to and when I have to say voice. Okay, next action item is approval of budget transfers and amendments.
With the approval of the budget transfers and amendments, if you could refer to the third page, if you just, and then what I can do is take you through that. And the third page has the revenues, and it starts out with the first column is the general fund original budget, the general
He's
fund
referring to the
budget
ones with the
transfers.
dollar amount, not counting the cover page.
Third physical page.
Yeah, the third physical page. And then, so we have our budget transfers, which take the existing budgeted funds and transfer them across sources or functions to another area while holding the total amount of revenues or expenditures available to the district constant. With budget amendments, they change the bottom line amount of the budget for a fund. And when changes impact revenue accounts differently than expenditure accounts, there's also an impact on fund balance. So if you see in the first column, the general fund budget transfers, there are no budget revenue transfers. And then if we go to the budget amendments for the revenues, the first one is the operating transfer consisted of an indirect cost transfer of $5,547 from Fund 27 for the IDEA preschool entitlement grant. Then the next one for local sources, you'll see an additional $500 was added to local sources for the Wisconsin DPI School Recognition Award for Hadfield Elementary. And then taking that down, intermediate services was increased by $1,796 for the Carl Perkins grant. And then the state sources is a combination of $81,200 for the Educator Effectiveness Grant and $22,900 for the SAGE entitlement budget. Then going down to the federal sources, there was a budget allocation increase of $20,837. The IDEA CES budget was reduced by $30,000 per DPI. And the Title 1A budget allocation was increased to $105,847 per DPI. And 2A budget allocation was increased to $120,893 again per DPI. And then finally, there was a $125,000 Waukesha STEM charter school grant that was added to the budget as a federal source. So if you look at the total revenues, the net effect of the above changes increased revenues by $454,520. So then if we go to the following page, we're looking at our budget transfers. And as you can see there, the budget transfers, there were not that many in total when you take to the second digit of the function. And the transfers between accounts they're made at the request of principals and budget administrators. The transfers are made between expenditure accounts within individual budget, building or department budgets. And they're also made to comply with grant requirements or changes in reporting requirements as directed by the Department of Public Instruction. And as you can see, the transfers net out to zero. So there was no change to total expenditures as a result of the transfers. Then looking at our general fund budget amendments, and basically they fall into two categories. And they're to offset the changes that we just discussed in the grant revenue expenditures, which increased by $466,960. And as part of the grant changes, budgets were adjusted to comply with grant reporting requirements that required more detailed reporting functions that had been used in prior years. And then the second component of the budget amendments was the site carryovers, and that was for a total of $627,807. And then finally, the general fund operating transfer from special education fund was increased by $4,724 for the indirect costs. So the net effects of the budget amendments increased expenditures by $1,099,491. So then if we move to the other funds,
Take a pause and see if there are any
okay,
questions. just
is
on
there
the
any
general
questions?
fund.
Well, I caught up at the end. So, when I look at the bottom line number, the change in fund balance with the asterisks after it,
That was due to the site carryover mainly.
so it's fund balance decreased by that amount?
Yes.
That's what the, in parentheses, means it went down by $644,971. So explain that to me, someone, the site carryover, what that actually means in terms of why that's a delta on a decrease of our fund balance?
Our buildings are given allocations, and so to encourage them to use their money wisely, we allow them to carry funds from one year to the next. So last year, at the end of the year, $627,000 was unspent, which means it ended up in our fund balance. And so we're allowing them to carry it over into this year to use it on projects and to continue within their existing budgets.
Okay.
So that's why it hits fund balance, because we've already levied for it once. And so that's where it sits. Similar, the $17,000 was grant income that came in from a previous year. We've already received it, but we didn't spend it. So this is just recognizing the expenses that'll come out of funding that came in previously.
So I guess a general question I would have is, in terms of our annual site funds amount, what's our year-to-year allocation less the rollover?
Remember what the total allocation is?
The total allocation was approximately, this is approximately a third of the site allocation.
So okay, so it's a third of the total, so then if that's what you're saying, then this year, if this is a third,
So we're looking at about 1.9.
1.9 they have for the sites then. Okay, that's what they would have with this rollover included, would be about 1.9 million.
That's their total site,
Right.
that's their total site allocation
Without carryover.
without the carryover.
So so the 1.9 plus
2.5.
6.
So it'd be 2.5.
Yes.
Okay. Mr. McCaffrey?
The site funds are done on a pupil basis, correct? And so much per pupil. So
Yes.
that is a moving target as well.
Correct. So it changes year to year.
Okay. And then just a quick The 644 is just another example of how that fund balance is a little murky about what we actually have in it. I mean, that's,
It definitely,
you know,
when we quote fund balance
it's a
on
lot of
June
money
30th,
that's jumping out of fund balance
it's a
right now. We were
measurement,
just talking about
yes.
that last meeting about how that fund balance, we got all this money in the fund balance. How much do we have in the fund balance? Do you know how much we have in fund balance?
The 23?
Yeah, it's about approximately 23.
23.
And we're gonna take out 644 going.
Yes.
Right off, gone. Okay.
Now, typically, we will end the year, buildings know they have carryover, so at June 30th,
Yeah,
you're
maybe
going to
back
see
in.
something similar. It's
But it'll be
a
back
rolling-
out the next year.
Right, it's a rolling cycle.
It has to be accounted for as not a permanent part of the fund balance, that money.
Mr. Edlin?
So it's not really being taken out. We're parking it there, and it's a restricted fund.
No,
Well,
restricted fund
in
means it's
theory,
out.
these are the first dollars they spend, because the carryover is only current allocation. So these are in fund balance on June 30th. They're going to be spent, but they will be replenished because they aren't going to spend out all of their allocation next June 30th.
So where do we park,
But they could, that's correct.
so where do we park the revenue now when we get the revenue to cover that fund balance that they're allocated? In other words, they've got 1.9 million coming. We'll get that revenue in.
Well, it's just part of our revenues in total. Tax levy, equalization aid, it's just one of the places we allocate it as an expense. There isn't a specified dollars on the revenue side that make up buildings allocations.
Mr. Como?
Yeah, just a general comment. I'm amazed at how close you can get on those transfers. We have almost nothing that's being transferred, very little. So you guys go out and you make your predictions when you're putting the budget together on, you know, roughly $150 million of operating costs, and you're within a fraction of a percentage. So kudos. I mean, that's very few changes as far as the transfers go. And the amendments, those are going in the right direction. Who would ever turn down those additional revenue sources that you know, are offered there? And those are just changes in what DPI had allocated and those kinds of things. So
Right. At the time when we're building our budgets, we aren't guaranteed our grant dollar amounts. So a lot of what you see now, this time of year, are finally, we've been awarded those grants, the dollar amounts are locked in, and we can spread them to the appropriate places and recognize them.
right, and even that additional revenue, it's, you know, I don't want to poo-poo $1 million, but from a percentage perspective, it's still really small. So kudos to you guys to making the predictions that you did. These are relatively small changes in amendments and transfers. So.
I wish I could tell you June would look the same way, but you'll see that's when people start getting into their budgets, then they start moving the dollars where they need them. So you'll see more of a shift to the transfers in June and fewer on the amendment side.
Mm-hmm. Yep.
Okay.
Ready for
Any other
continue to the next
questions?
fund?
On this page, any other questions? Okay, next page.
And then there were, just in the special projects, there were just a small amount of budget amendments, 4,514, and that's detailed out amongst the Coles Care and CPR training. So it's just a small, and then as you have the increases in your budget revenues, you have your corresponding increases in your budget amended expenditures. Then going down to the special education fund, the majority of that is the change in the federal sources. So if you look at the federal sources in special education fund, it increased $341,111. And that would consisted of two different grants. It's the IDEA flow-through budget increase of $315,492 and the preschool entitlement grant of $25,629. So those are the components that increase the Fund 27 budget amendment revenues. And then, of course, as you go down to the budget amendments for Fund 27, there'll be the corresponding expense account codes for the additional grant funding. So then if we go, any questions on Fund 27? So then if we go down to our debt service fund, and our debt service fund was Fund 38, and that was used for the energy efficiency project note, and the revenue of $169,566 was used, we sold the note at a premium to recover original issuance costs. So that's why the revenue was increased $169,566. And then if you look at the expenditures, we had the debt service payment due on April 1st, 2005. So that includes the debt service principal payment of $1,955,000. And then there was a slight change in the interest expense. And then also the cost of issuance of the debt was added to that budget amendment of $112,613. So the net effect was to increase expenses by $2,069,303. And then finally, for the capital projects fund, we're using Fund 44 for the energy efficiency project. And the budget was added in the budget amendments to reflect the $45,000 in energy project rebates and an additional $2,500 in interest revenue from the energy efficiency funds. And then in the expenditures, the timing of the energy efficiency plan expenses moved $43,536 into this fiscal year, with the total project expenses remaining unchanged. And then if you look at the last page, that's what's going to appear in the paper for a notice of change in the adopted budget. And it only reflects the line items that actually had a change in it.
You'll note when we publish this, that the Fund 21 and 27 get combined, and that's in the same format that is the recommended publication format from DPI. So it's the method we used when we originally adopted the budget, so that's why you see they're consolidated here as well.
Okay, any questions? Everybody's had a little time to study the numbers after the feedback? Any more information on this?
No, just just going on to the next item on the agenda when we're ready.
Okay. So we need an action item for approval of the budget transfers and amendments.
I
Mr.
move for
McCaffrey?
approval of budget transfers and amendments as presented.
Anybody have a second for me? Mr. Edlins
Second.
provided a second. Mr. McCaffrey motion, Mr. Edlins second. All in favor, say aye.
Aye.
Opposed? None opposed. Passes 5-0. Okay, now we're off to the information item, monthly budget update.
Okay, on the monthly budget update, if you would please look at just page 1 of the financial statement, which is on the second physical page.
It's the one that's very difficult to read. Looks like our ink is fading here.
And then if we would just flip that over to the equalization aid, you will see that's in the state sources. It should be the second column, December 2014. And if you look at that, that's where we received 98% of our aid for the month of December. It's $12,905,000 in equalization aid.
Which page are you on for sure? I'm kind of lost there.
The second page of the financial statements. And if you look at the second page of the financial statements, the third column, December 2014, where we have $12,905,000 in equalization aid.
Okay.
That's 98% of the revenue we received in the month of December. And that also includes 25% of the annual equalization aid. So that encompasses the majority of the revenue for the month. And then if we look at the very bottom line of that page, overall in the general fund, the district has received 15.53% of the annual fiscal year-to-date revenue, compared to 16.59% last year. So we're on target on what we anticipated, and basically 98% of the aid in the month was due to the equalization aid. And then if we flip to the next page of the financial, we're looking at our salaries and benefits. And our district has spent 36.83% of the budgeted amount for salaries year-to-date, compared to 36.39% last year. And then the final grouping was in fringe benefits. The total employee benefits amount spent year-to-date is 38.43%, compared to 44.7% last year. And then going to the following page, purchase services. The year-to-date pupil travel expenses, which is for student services, that's through October for both 2013 and 2014, so we have a comparison there. And then if we look towards the very bottom, tuition expenses, we have $298,935, and that is for our 4K tuition partners. So the district has spent 26.8% of the fiscal year-to-date budgeted amount of purchase services, compared to 22% last year. And then just to look at our debt retirement, if we go to page 6 of the actual financial statement, on the very top, it has the debt retirement, and then we see one debt retirement payment of $510,000, and that was for the new Apple lease. And then we'll have 2 remaining annual payments for the next 2 years of $162,000 each for that Apple lease. So overall in the general fund, the district has spent $46.03 million, or 31.54% of the budget, compared to $45.79 million, or 32.89% expended by the same time last year. And then on the final page, the Fund 27 has also been included for your review. The last 2 pages, there was $916,936 in state handicapped aid, $186,000 in federal aid. So overall in the special education fund, fiscal year-to-date revenues received are 8.86% of the annual revenues anticipated, compared to 7.9% last year. The district spent 33.77% of the budgeted amount for salaries year-to-date, compared to 33.19% last year. And employee benefits were at 32.28% fiscal year-to-date, compared to 37.88% last year. So overall, in the general fund, year-to-date, the expenditures are $8.71 million, or 30.74% of the budget, compared to $8.36 million, or 32.33%. expended by December of last year. And then if you look at the very last page, we've also included the health claims payable balance through December. And as you can see, the balance has also moved up. It's steadily moving up each month of the year.
Mr. Como?
So Joe, is it fair to say that we're tracking pretty closely to what we predicted? It looks like we're,
Yes.
for both revenues and expenses.
That's correct.
And also, when we look at our health claims payables, that looks like that's pretty much tracking where we hope it would be too. I mean, we weren't sure. That crystal ball is a little more fuzzy, if you wish, because it's a very brand-new crystal ball, and we're breaking that one in. But there really haven't been any surprises to date for really any of our funds, it looks like. Is that a pretty accurate statement?
Yes.
Okay, and from a cash flow perspective, we got through our toughest time.
Yes, we did.
So-
We actually had a few municipalities send their first payment on Friday, so we're
For the
in,
month of
Ahead,
January.
ahead a little bit.
for the levy, so a little bit ahead, so we're in fine shape.
That's nice. That's nice.
Yeah,
Like you-
January tax checks are due January 15th. That's also a payroll day. Oh,
Cash in, cash out, huh?
exactly. So that was one where it's like, okay, yeah, you know, it's gonna be tight, but a couple of them sent them early.
But we're looking
and-
good?
And
Yes.
we are doing very well.
Okay.
Quick question. When we looked at our disclosed fund balance, that would have been as of July 1st, or when would that have been?
June 30th is
June
typically when
30th,
we- yeah.
okay. So in essence, just looking at the insurance impact or the health claims impact, am I to say that our balance in the fund balance would have went up $1.3 million by that particular number? Because the difference from when we started was 1.2, and now we're at 2.5.
We actually record this as a liability on our books, so our liability is increasing each month. But what that means is we have more money set aside for claims. Each month, we increase that. So if at the end of the year, we have too much money sitting in that liability account, more than is actuarially sound, it then has to come out of the liability account, and then it hits the fund balance. Sorry, that's a convoluted way to answer
No,
your question,
I
but
understand what you're saying. But I guess from an accounting point of view, it doesn't hit the fund balance. If this built up to a certain point, it might roll into an impact on the fund balance, whether it was high or whether it was short, which could then be made up by premiums, increases or decreases going forward, correct?
exactly, it can go either direction.
Either direction. Mr. Como?
How do we determine the feasibility of the size of that liability?
It's based on prior claims, so actuarially, we analyze the length of time it takes to process claims. We track them by month. So the claims we pay this month, we actually go back and break it down into the periods of time where the services were actually incurred.
Okay.
And so based on that analysis at the end of June, we know that we have X number of dollars that we're gonna pay out in July that relate to June, May, April, you work it backwards. And so actuarially, based on our history, we calculate what that incurred liability is.
So are you doing that, or you or your team, or are we relying on our vendor that does some administration for us?
We do it independently, and they also do a claims analysis, and then we compare the two.
Okay.
So we actually track based on every month. They do overall based on total dollars. So we come from two different methods,
Oh.
and then we,
Have they been in sync?
last year they were.
Nice.
Only have 1 year to compare, but
Fair enough.
Quick question, what's shown down here is clinic. And it's flu vaccines. Kind of interested in what those mean in terms of where those, what does that really mean in terms of flu vaccine? Where does that money go to?
That's what we paid for Serum to provide the flu vaccinations to our employees.
Okay. And so that was a 1-month expenditure that would go against our health account? And then what about the clinic?
And we are now getting invoiced for the cost of the clinic, and you will see every month now our charges related to that. And these are actual invoices we get.
Okay. So I see that that's been rising. Is there a reason why that rises? Is it expected to continue to rise? And where is it expected to flatten out at?
Well, the November charge, actually, if I'm not mistaken, I believe that's the fixed monthly charge that we are amortized to the county. And so, and then the actual service charge, you're gonna see a delay. So what we paid in December related to November.
So anything above the 44.
Right.
So I guess in terms of auditing, because we're in the middle of there's 3 partners in this, right? There's the county, the city, and ourselves. Are we going to have, at what point will we have a review of what our portion of the cost has been and what our utilization percentage is relative to the county and the city?
Meaning actual versus contracted billings.
Right.
Once the year is done, we will go back. And we do track actual usage, but based on our contract, it's fixed amounts for the first year. It's fixed percentages.
When's the year done?
I would think that it's the end of October.
Okay. Mr. Cummel?
And that's based on number of employees, right?
Right.
So, and that's what we agreed was number of employees,
Initially,
And
we're
then-
44% of the mix.
then look at the data?
Yes.
Okay, so we'll be looking at that in September-ish,
And we're
October-ish.
tracking utilization every month, but there won't be any adjustments during that first year.
Have we gotten any feedback as to who's using it? And do you have a sense of who's using it in the sense of our district compared to the county, compared to the city?
I have seen reports, and off the top of my head, I can't tell you how we're tracking.
And we're really early in the game. I mean, probably too early to really ask that question, but it was more of a curiosity thing. It's meaningless right now, but over time that will become important.
Yes, and we will continue to monitor that.
Okay.
Encourage our employees to use it.
Well, I think it's, whenever we have something that's significant impact on the district and the clinic is, I mean, it's a partnership between 3, it's a change in what we're doing things, if there's some assurances made on the value of that, we need to watch it pretty closely and keep board members informed. Simply because, these things assurances are made, and there's questions about assurances, and it's nice to follow up and see how it actually came out. I would say the clinic's one, and I would say the borrow that we did for the energy.
The energy projects,
The
yes.
energy project is the other one. Right? Make sure it's going as was expected in terms of, we wanted to see major things actually bid out instead of just automatically Siemens get it. And we need to,
And at this point, there's nothing to report on the energy project. We're just getting the groundwork started. They've been
So-
doing the proposals and the bids, so.
okay. March meeting, maybe, something to report on the energy project?
Oh, sure.
Okay.
Yeah.
Any other questions? We're still in the information, so if anyone wants more information, now's the time to ask. Okay, anything else from administration at this time? Okay, then I guess we are, from what I can tell, that's the end of our agenda, is it not? We are adjourned. Thank you, everyone.